Alright, so Topstep has just moved me to a live account, and in this video I want to share with you the crucial lessons that I've learned along the way that has made this possible. In 2025 so far, I've received $70,000 in payouts from Topstep, which I know isn't insane, but it is a consistent income that I've been making from trading. So in this video, I really want to just lay out some of these crucial lessons so it can hopefully help you in your own trading, because some of the big lessons I've learned are literally the difference between finding success in trading or not finding success at all. So the first big lesson I've learned is that you should never aim for perfection. Perfection is an illusion, especially in trading. There's always going to be times where you make mistakes, there's always going to be times where you take losses, and that is just a part of the game. I feel like a lot of people don't succeed in trading because they cannot handle this. They cannot handle that trading is an imperfect game, and that they're never going to find that perfect holy grail strategy that just wins them every single trade as they ride off into the sunset with their millions of dollars. Anyone who presents an illusion of perfection is trying to sell you something, and they're a marketer and not a real trader. Because I've backtested now thousands of hours, and I've never found anything that is going to give you perfection. But the good thing is, once you fully accept this, and you accept the actual reality of trading, that it's never about perfection, it's never about winning every trade or winning every single week. It's just about pulling consistent money out of the market over a long period of time. And I know a lot of people use this analogy, but it's a great analogy that your losses in trading are business expenses. There's no business out there that you can run with no expenses. There's always a margin. And so for you to think you're just going to come into trading and just profit all the time and only have green days is a major illusion, and it's backed by people on social media sharing only green days, showing a whole month of only green. And that gets it into your mind that this is what's supposed to happen to me. But this is not the reality for most traders. And the truth is, the reason you're only seeing green days is because they won't allow themselves to take a losing day, which is very dangerous. I'm sure if you see a trader and it only shows green days across an entire month, then I guarantee at least a few of those days, they started taking losses, and then they started oversizing and fighting back to make back those losses, and they ended on a green day out of just pure luck. And this most definitely will not be sustainable for them in the long term. So it's a lot healthier to be taking losses and walking away on a losing day throughout a month, because this shows that you have the power to walk away from a losing day, which is one of the biggest skills that you need to have to be a profitable trader. If you could literally master just this one thing, which is walking away on a losing day, then that would take you so much further than almost every other trader out there. Because I've now talked to dozens of traders, and this is one of the biggest things that they struggle with, is they just don't want to allow themselves to end the day on a losing day because it's painful. And so that's another lesson that I've learned, is that doing the things it takes to be a profitable trader is painful. And there's no way around that. It feels more pleasurable to do the wrong things. It feels pleasurable to oversize. It feels pleasurable to overtrade. It feels pleasurable to turn a losing day into a winning day. But is this profitable over a long period of time? Most likely not. So what you need to understand is probabilistic variance. This is the variance in probabilities that you're going to experience throughout your trading journey. So you can have a strategy that's amazing, right? Let's say you have a strategy that has an 80% win rate. If you've ever played poker, you know that aces against kings, if you have aces and the other player has kings, that's a 80-20%. So there's a 20% chance that kings will win, and there's an 80% chance that aces will win. But if you've ever played any amount of poker, you see aces get cracked all the time by kings and other random hands. This is the variance in probabilities. So, of course, aces have a higher probability of winning, but that doesn't mean that they'll always win. And sometimes you can run into a very unlucky spell and lose with aces 3 times in a row. And to the mind, this is very tilting, right? Because you're like, I'm supposed to win. I was supposed to win this hand. But it doesn't matter what you think. It only matters what the math is showing in that moment. So if you have an amazing strategy, you're still going to go through downturns, no matter what. And this is what's very hard to handle. This is where people go off the rails. When everything's going well, trading's easy, right? If you're just winning and all is well and money's coming into your bank account, then everything's good. It's the downturns that people don't talk about. And every professional trader experiences them because of probabilistic variance. It's mathematically impossible unless you have a 99, 100% winning rate strategy it's impossible to not go through a variance of probabilities where things don't go in your favor over a series of trades. It's like if you've ever seen a roulette board where black shows up like 13 times in a row. What are the odds of that happening? Probably very slim. But it does happen. And so you need to account for these extremities in probabilistic variance, where sometimes you'll take 5 losses in a row, but other times you'll take 8 wins in a row. So you need to keep this in mind when you're trading. Okay, maybe I am on a bit of a losing streak, but I always know it's going to come back around because the math shows that it has to. And it's important to not let these downturns get into your head and make you think, I'm a bad trader, I suck at this, I should never do this, and quit trading. Because as you know, I've pulled $70,000 out of the market so far in 2025, but just in the last couple weeks, I had a drawdown before going into this live account where I started out June really, really well. And halfway through June, I was already up $17,000 on the month. And by the end of June, I was only up $10,000 on the month. So I lost $7,000 in half a month, and almost every trade I took was a losing trade. But this is normal. People would look at this and be like, this guy doesn't know how to trade. But I'm not focused on the short term of how much I've made this week or how much I've made in the last couple weeks. I'm only focused on, am I pulling money out of the market every single month, month after month? But even while going through this downturn, I still took a really good amount of payouts in June. So it's not like June was just a bust month. I was still making money, right? From past profits I had made. But I'm going to be honest, like when I'm going through this downturn, your mind goes to a dark place. And you start to think, should I even be doing this? Especially for me who now has this YouTube channel and I do want to teach people in the future. You start wondering, should I even be doing this if I'm going through a downturn? However, going through a downturn is part of the reality of trading. And it will happen to everybody. So that's why I want to preach to not lose the forest through the trees. You want to maintain that bigger picture of, I know I have an edge, I know it works, I know I'm a good trader, and just because I'm going through a probabilistic variance of a downturn does not mean that I shouldn't be doing this or that I suck at trading. It just means that probabilities have been falling on the wrong side for me throughout this little period of time. And another lesson that I've learned is that you need to let every single loss drive you. You absolutely need to learn from every single loss. It seems like for me, I go through one of these downturns once every couple months, and every single time it always drives me back into backtesting. So throughout the last week, I've put 40 hours into backtesting to just go over it over and over again, beat my strategy into my head, and find out where did I go wrong throughout these trades. And sometimes it's not even that I went wrong. Like I said, it's just probabilities not playing out in your favor. So you need to remove the personal aspect from your trading and only focus on the process. It does not matter if you made money today or this week. It only matters if you have a mathematical edge, if you are showing up and making the right behaviors over and over again, and if you've put protective mechanisms in place to protect yourself from yourself in terms of protecting yourself from the spiral of doom. And that is when you start to spiral out of control, oversize, do risky behaviors. You never want to get to that place and walk away before you ever get there. Then you can get to a place where you can actually feel comfortable relying on trading as a consistent income. And I'm not going to sit here and tell you that I'm making millions of dollars trading because that is not the case yet. And I most definitely plan to scale up my trading over time and hit those big months, those 50K, 100K months. But I have not done that yet. However, on this channel, I really want to focus on what is the actual reality of trading. If you're getting into this and you actually want to do this, what is the real reality of it? What are the actions and decisions you need to make to consistently pull money out of the market in a way that's actually predictable? Not just boom and bust cycles of making tons of money and then losing it all, but actually building a real business that you can rely on month after month. And what is the actual process of scaling your trading income in a way that's predictable and sustainable? And that is the journey that you're going to be taking with me, because over the next little while, my main priority is going to be to scale up my income through other prop firms, through getting into my funded futures, take profit trader, other futures prop firms, and focus on a way that I can mathematically and predictably scale my trading income without having boom and bust cycles and without going through the emotional turmoil that you go through when you're a gambling addict. Lastly, one of the most important lessons of all time that I need to reiterate over and over again in every single video is that if you are trading as the mind, if you are trading identified with your ego, trading is going to be extremely difficult for you. One of the most important things is you need to understand that you're not your mind, and you're not the things that the mind says. If you notice right now, you'll probably notice your mind is talking and saying things about what I'm saying in this video, and making up thoughts about what you need to do later today. Most of us are identified with this mind and we think the mind is us. And we think what it says is extremely important. But the mind does not have your best interests at heart when it comes to trading. It'll always try to sabotage you because it just wants dopamine, and all it wants you to do is to do exciting things, and it wants to make money now. It wants pleasure now. It doesn't want to do the things that it requires to be profitable. And the mind certainly does not want to take a loss and walk away from the day on a loss. It wants to prove it's right. It wants green and profits now. And it wants to feel good. And it does not feel good to walk away on a losing day. But you need to walk away sometimes on a losing day to be profitable over a long period of time, or else you're going to fall into this downward spiral of doom where you get more and more tilted and you size up until you blow your entire account. So, it's so important that you trade as the observer of your mind rather than the mind itself. Rather than you being completely invested in the mind and being the mind, you pull yourself out of it and you see the mind down here, but you are the observer up here. And you see the thoughts it says, the beliefs it has, and you're just the watcher. You watch your emotions, you watch your thoughts, and you work on building in this awareness. And so you have this buffer zone in between the stimulus and the reaction that you take. So when the mind says, take this trade now, oversize, you are outside of the mind as the observer. You see it saying these things, and you choose in that moment not to act on what the mind's saying. And this is for anything in life. This is extremely important for staying present in the moment and just for managing yourself and noticing that this mind does not have your best intentions at heart. Not in trading and not in life.